This is the August 29 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists are Ellen Dearden of AgReview of Morton, Illinois, Curt Kimmel from agmarket.net in Normal, Illinois, and Brian Stark of the Andersons from Mansfield, Illinois. Commodity Week is a production of Illinois Public Media. It's public radio for the farming world, online, on demand, anytime you'd like at willag.org, or search Commodity Week out in your favorite podcast applications. Let's start with a list of items that we should discuss for the day. Ellen Dearden, I know you probably have a couple of things. What's on your mind?
Well, as the market looks at a large supply, I think that we're saying that how big is big, and maybe it doesn't matter because it's big. So let's talk about demand and where the demand factors could ramp up.
Curt Kimmel of agmarket.net.
Yeah, most definitely supply. That's still going to be talked about here short term overall. There's some moving parts there. Then too, what should we look for as we move into this fall here? There's some seasonal tendency to maybe give the guys some hope here as we go into this fall.
And finally, Brian Stark of the Andersons.
Yeah, I'd like to tie into the demand side of the equation this fall and what it means for overall basis direction. We talk a lot about the futures, but I think with the big crop upon us that storage could be a challenge, and farmers are going to need to navigate, how they navigate basis directionally here in the next 2 to 3 months.
Let's start with that. Can you lay out your thoughts to begin with?
Yeah, I think the biggest thing, just looking at some of the positive signals we've seen in the market, of course, this week tends to have a lot of seasonal pressure with the end of the crop year and farmers selling the remainder of their old 23 crop before we start a new crop year. And we've seen some flash sales recently on the export side from China on beans, as well as some increases in corn business to Mexico and Japan. But I think that the thing that it strikes me, while we're seeing a positive turn, we're still sitting on commitments for new crop on beans, 10.2 million metric ton, which is still the second smallest in 16 years at this time. And new crop commitments on corn, 9.4 million metric ton, are 9% below the 10-year average at this time. So corn feels like we're trying to catch up. Beans still have a ways to go, and I think that's the one stark thing that sticks out to me when you think about a large crop and how the farmers navigate storage of that, is that there's just simply been a lack of Chinese buying on the soybean side that sometimes allows that demand component to give some a floor to basis. And I think obviously until we see more business done, basis is going to be under pressure given the lack of put-through opportunity at the country elevators.
What is that reflected at this point?
I don't think it's reflected completely, and that's kind of my point that, if the farmer, as he gets a handle on the size of his own production, needs to really think about what makes the most sense on what he's going to store on farm versus what he's going to move to town. But I think that the tone is certainly weaker, just given the fact there's not enough space in the Eastern Corn Belt specifically to absorb the potential size that we're going to see from this harvest.
Do you have an idea what that basis break might look like in cents?
I would say today nominally corn basis is 30 to 40 under, depending on if you're looking at East Central Illinois to West Central Indiana, and I think you probably have 10 to 15 cent downside without potential increase in demand on the export side.
Ellen Dearden, as you listen to this bit of the conversation, does it give you pause? Have you been talking to producers about the issues related to the crop that they have to move, particularly in this case soybeans, into town, and that they generally will and oftentimes will try to sell across the scale as well?
Yeah, soybean basis is extremely weak in this central to west central Illinois, primarily because there's no export book and the river system is a little boogered up with availability of barges. Now, the rail market out of this area is primarily used for corn, so it's not on the bean side, but it's not unusual in this neck of the woods to see a 70 under bean basis for fall delivery. There's not a farmer that I know of that's really anxious to pick up any of that.
And what should they do? How do they just put it in for that needs to go across the scale? Do they just take the in charge and store it there?
I think they won't when push comes to shove, because I think there's going to be a lot of elevators in this neck of the woods and going west that are going to require sales for bushels going across the scale. They're going to require sales to be made.
Oh, interesting. I guess that is not something I had thought about happening. It's been a long time, maybe, since that has taken place. It surprises me. Will it surprise farmers?
I've been talking about it now for about 30 days, and nobody seems to be buying into the program to want to do any selling. Now, even this little blip up that we've seen this week hasn't sparked any kind of interest in selling, even though that gives a farmer in this neck of the woods about a $9.20 cash price for fall.
Hey, Brian, just to double check, because I want to make sure I have things straight. She's correct that sales will be forced across the scale potentially?
Yeah, I think the farmer has a tough decision. And I think the market signal, because Ellen hit it on the head with the lack of an export book and the tendency for a lot of the rail programs to run corn out of the East Central Corn Belt down to the Gulf more heavily and dedicate more of the river freight, which obviously is dealing with the lack of barges, but also low river level water levels right now. So I think the farmer has to look and say, okay, what commodity makes the most sense? The cheapest storage costs of those bushels aren't wanting to be sold. I think every situation is going to be different based on cash flow needs. And sometimes the farmer tends to lean towards selling beans across the scale to get the bigger cash flow need taken care of. But I wonder if beans into on-farm space don't start to make a little more sense given these wide basis levels versus putting corn in storage.
Curt Kimmel, your thoughts on this topic?
Yeah, Brian, the thing that's really stuck out is this low river, and it's not going to get much better. It's kind of a shocker with some of the rains we've had in some of these areas. It's just going to add to transportation costs, and it's going to be a thorn in the side in through here. But one thing to keep in mind, the producer as a nation is probably 10% sold. And yes, needs some more marketing, but however, the end user is only 10% bought. And just listening to the commercials guys, they're actually trying to scramble in here, figure out how to get some more coverage on. So I think you're going to see guys push the pencil in their own situation. It's going to vary a lot from area to area. But what you're going to see is free DP and push towards basis contracts again this year. So there's going to be a lot of different situations. You need to pencil it out and see what works best for your situation. I think the widest basis is just around the corner and through here. I think we can see some improvement maybe going into Thanksgiving and so forth. But the number one strategy in here is try to free up some cash flow here as we move into this winter to keep debt under control.
Can you talk about the seasonals you were thinking through? And I don't know whether that would be for soybeans or corn, but if you've got a soybean seasonal that might be of interest at this point, I'd like to hear that too.
Yeah, it depends if you look at a 30-minute seasonal or a 15-year seasonal. There's a seasonal spread out as to what you'll find something to support your position. But over the last multi-years, there's been a correlation between throwing in the towel here at the end of August, and all of a sudden the calendar turns September 1st, new marketing year. All of a sudden, the grain's worth a lot more than it was the previous week. So that's number one. But number two, if you look at the more research seasonality, 15-year seasonals, it's got a dominant low here in October. We've priced in a lot of negative news by then. We got halfway handle on the crop size, and oftentimes you watch those two windows in through here right now, and once again here in October, and that's the ones that's probably going to be the most popular ones.
Ellen Dearden, you suggested we should talk about demand because it matters. This may be with the soybeans. I suspect you were thinking of corn, but you can take up either or both at this point. What parts of the demand situation are you watching most closely?
I would say the processing demand, both on the bean and the corn side, have to remain strong. Now, we saw an excellent grind last week on the corn side for ethanol, and I don't know if we can maintain that, but that kind of a use of corn, about 110 million bushels for the week, is something that we just need to be pushing. I think we will see some improved exports of corn this year. I think that will pick up because of two places. One, Mexico is really needy on the corn, and that will continue. Again, that's going to be a rail market primarily. But on the other side of things, the Ukraine corn crop is going to be considerably less. And so you see a lot of Ukraine corn going into the Asian markets. So I think the U.S. is set up to pick up some of that export business. The inside's pretty hard to pick up the export business there.
Brian Stark, would you agree with those assessments about the ability of the U.S. Corn crop to be exported out of the United States?
Yeah, I do agree with that. I think corn does have a better story than the soybean complex today because of that fact. If you look back at the August WASDE report, we cut the world balance sheet 8 metric ton, partly because of Ukraine's dryness. And I think that does give a little bit of silver lining that day. You know, we print arguably the biggest yield ever at 183, and the market, I believe, bounced 5 to 6 cents higher. And I think that's something we need to focus on, that, you know, we're currently sitting at 4-year lows on corn. And obviously there's a potential upside to some export demand there. I think that gives corn a floor once you get through some of this old crop hedge pressure from producers finishing selling out the 23 crop. I do agree with Curt that it's easily the next week we tend to see prices start to rebound. And I don't know if that's worth 20, 30 cent rally, but I certainly think that corn has some more upside short term than the bean balance sheet does, because it feels like today China at some point needs to come in and buy beans, but they've been very methodical and picking and choosing here to just start recently, and we've got a long way to go to catch up to what our normal pace is, and that's where the concern is. I think, you know, I referenced potentially because of white basis putting beans into storage for maybe a better basis opportunity. That does not mean I'm willing to recommend to a grower to put them in the bin and forget about them, because I think the bean futures market certainly has more downside potential if we do grow this size of a crop with the lack of export demand than say corn today.
Curt, are there fundamental reasons that we've seen for the Chinese to be out of the market for U.S. soybeans? For instance, is it that supply is really great coming out of South America, and they simply have shortened their supply chain, or how long the distance is to try to get soybeans into their nation? What is their hog herd size at this point? Has that had an influence, and the usage otherwise that they've been looking at? Have you been following that closely? And I'm quite certain you have.
Yeah, I think it's just all the above. China would much rather buy from somebody else than us. You know, we're losing the export share of the world market. Their growth is just stagnant. And plus, meat-wise, meat demand, herd-wise on livestock just flatline. But two, they've filled reserves up somewhat. You know, the big buying we saw was replenishing some reserves. So if they move some inventory out and need to replenish supplies, I think we can see it. But they, you know, the function of the market is to go lower and seek out demand. Well, since we've moved lower in here, we're starting to see China come forward. They're not buying a million metric tons at a time. They're consistent buying, and they need to, because they got to get these purchases on the books, and they got to direct boats to the northern hemisphere and get those being shipped. Then they'll move the boats to the southern hemisphere. But they'll buy what they need to get by. On the demand side, corn balance sheet's much tighter. I believe the demand's estimated another 10 to 15 million bushels. I think feed demand is going to be huge, or better, true feed demand at these lower levels. Guys are going to feed the heavier weights. And ethanol demand is a little higher, but, that's a long-term play as we move into the new crop supply-demand balance sheet. As far as logistics and demand, we got to remember we got a short crop in the southeast. So there's going to be opportunities to fulfill that void. Originally, commercial guys were looking at, Ohio will take care of it. Look at the good to excellent category on Ohio come Monday. They've just rapidly deteriorated here in the last 2 weeks. And so that crop has shrank quite a bit in through here. Is it a big bull market maker? No, but I think it's going to give us some support down the road, Todd.
Ellen Dearden, can you walk me through the livestock demand side of this, poultry, pork, and beef, and the heavier weights? And I'm really thinking about the beef cattle in the heavier weights. Those numbers continue to go down, the herd size is. However, USDA, I suppose, is putting a fairly large demand figure on usage as it's related to feed and residual side. That'll come due again at the end of September. What do you think it really looks like today?
Feed demand is steady, maybe a hair better. We are feeding both cattle and hogs to much higher weights. For instance, we're 8 pounds higher than a year ago on hog weights. I mean, that's staggering, considering that the hog herd, unlike the cattle herd that's dropped, the hog herd has remained rather steady. So the feed demand is there from the poultry sector and the hog sector both. And the only way that it's really can move higher is if we start getting cattle numbers up. Yeah, we've got weights that are 20 pounds over a year ago, and that has continued. That probably will continue into the fall, but we need to see the numbers in feedlots pick up, and that's not going to come for a while yet. And that's not going to come for another year, probably. So I think the feed demand's probably going to just level off.
Brian, have you been following that feed side as well?
Yeah, I can't disagree. I mean, I think the one thing about feed is that it takes a while to get the numbers back up, as Ellen mentioned. So I think that's a potential growth opportunity, but it's going to take time to evolve. And again, I think given the current economics, as you look out towards 2025 and the remainder of the 24-25 crop year, growers will have some decisions to make coming into the spring. And, will they continue at these corn levels to consider switching more acres to soybeans as we head into there and potentially create that story, support that story for corn longer term. So I tend to agree with what Ellen has said up to this point, and I think that that's certainly going to take time to play out on the feed side.
So, Curt Kimmel, as you listen to this, domestic usage for corn then remains strong, but it's level. And we're not going to really grind that much more, I don't think, unless it's exported as ethanol for use in cars or fuel. And feed demand, as Ellen just told us, is, in her opinion, likely to be level. A big crop, as we already can see in the World Agricultural Supply and Demand estimates, is increasingly burdensome on the marketplace. Do you see the export market in any way coming in to fill the low prices, cure low prices issue that we're dealing with at this point?
Well, the export's been a tough one for corn. It's all beans, but the biggest savior this last year was Mexico's drought. We've shipped a ton of corn to Mexico. If Mexico's weather pattern cooperates here and they receive a little bit better rainfall, you have to question how strong exports will be. I don't think they're going to grow a whole lot more to Mexico. So that's the market you got to watch. It wasn't that long ago Mexico wasn't going to import any of our corn. Now all of a sudden they're our best friends here. So that's good news. The other thing, too, on feed demand, what we're seeing also is up in the spring wheat area, just huge wheat yields. And the problem is the toxin in it, and protein's not too bad in some areas. So, if this wheat crop can't go through the milling process and the toxin's not too high, we're going to have wheat fed in some areas if they can find an outlet and get rid of it. So, we got a little competition there. But when you look at the supply-demand balance sheet, you lower yield a bushel or so and keep demand steady. The 2 billion or less carryout's not real burdensome. So we're setting up the long-term price picture for corn. Maybe 350 is the lower end, and maybe 450 is the upper end. But if you look at a long-term price chart, whenever you see the moves up like we've seen here in the last 2 or 3 years, the moves are back down. And what I'm getting at, oftentimes when you come off extremely high prices, you come down and build a base, and that base could last for 1, 2, 3, 4 years. So hopefully these lower prices will encourage some more consumption, whether it's feed, exports, or ethanol, to get the market cooperate back to the upside here as we move down the road.
Ellen Dearden, I want to return to the end of the marketing year for the 2023-4 corn crop, that which is old crop. When I talked with Greg Johnson Thursday for the closing market report, he explained to us that there was a lot of corn still coming in, and that it would be put on the ground. Ground piles will be starting, and they're likely to have an extra 2 million bushels sitting there, instead of the 1 million that they expected to have, relatively speaking, or about the same as they would have had last year, which is a big crop because they have been able not to have to put ground piles out on occasion. How much of an issue does that across the whole of the corn belt? I suspect it will be duplicated. Does it become for the producers? And then, Brian, maybe you can talk about the logistical problems that they'll face as well. But Ellen, how much of a pricing issue does it become for producers?
Just kind of caps rallies. And I think the bigger problem is the logistical issues, where the stuff's going to go. And I'm curious, from Brian's standpoint, is rail car availability going to be a problem for him sending corn out of the eastern corn belt going to the southeast? Because that certainly looks like that could be a big deal this year.
Yeah, I would say that opportunity certainly is there. And you hit it on the nail, Ellen and Todd, that freight is going to be the biggest question mark availability for a lot of the central part of the Corn Belt down to the southeast. The southeast crop, they've had the last couple of years what we would call an above normal crop, and they've been able to live off a lot of local supply, whereas the 24 crop was much smaller than in the past couple of years. And so that demand for the rail supply from the I-states is certainly stronger. And I think really what it comes down to is logistics and execution, as Todd so eloquently put and asked about, because I think a lot of it is always timing. And are we going to have a quick harvest where it's dry and we get it knocked out in 4 to 6 weeks? Or is the planting window being spread out, maturity, or Mother Nature from periodic rains going to elongate that? Because I think that is important to recognize that a fast harvest creates a lot of bottlenecks and really makes it harder on the producer to be able to logistically get everything tucked away in a large crop versus more of a drawn-out harvest. And I think just naturally, because of the size of the crop and the lack of potential freight to move it in a timely fashion, will naturally drag it out longer than what it may normally be in a quicker window. So logistics are certainly to be a challenge. I think you'll see producers get creative like they normally do in big crop years, where elevators are carrying in a larger supply of the prior crop because of late liquidation. You'll see bags used as storage on the farm by some of the larger growers, and ways to continue to put away or tuck away the crop when the elevator may not be able to absorb it as fast as they'd like it to be.
And for just one point of clarification, and Brian, I think you and I talked about this at some point, or at least I believe it was you, where I had asked the question. It's not that the longer planting season, which potentially could provide a longer harvest season, offers any premium opportunity or for the basis to remain better than it might in a normal growing year, that it is mostly that if it all comes in at once, the glut causes a problem. And so that if it's spread out, it doesn't mean you end up with a better premium particularly.
No, it necessarily doesn't. I think it's certainly based on demand, right? Basis drives demand. Space, obviously, the need to fill that space creates that upward movement on potential basis. But I do think, when we were talking, that a elongated harvest tends to have a long tail where basis doesn't appreciate, whereas a quicker harvest, those that maybe have a wider window that finish towards the tail end tend to catch basis appreciation for bushels straight out of the field than if they're delivering in the gut slot like everyone else. So I think depending on your own individual situation, I know we've talked a lot about that today, I think thinking about your logistics and when your timing of your crop is going to come in matters economically, because typically what we've seen in most normal years is majority of the harvest comes in and then you've got the last 10 to 15%. And if you're on the tail end because your crop got in late, that could oftentimes be a benefit, because as the demand for the end user, not speaking to elevator space, but the end user, the ethanol user, the food corn person that continues to need constant flow, when those bin doors shut, that basis starts to ratchet up. And if you're still harvesting, a lot of times you can capture late season premium into the early part of November when most of the harvest pressure is done.
Time for some final thoughts. Ellen Dearden, I'll start with you. Anything that has crossed your mind as we've been talking?
We haven't talked much about exports of ethanol. That's a very bright spot and has been for several months here. I think that will continue. That could be something to watch.
Curt Kimmel from agmarket.net.
Yeah, I know most people like to be done, get to Florida, but it might be worth some, there's a lot more new storage out there, but doing some temporary storage and taking a little extra time moving things out and around to take advantage of some short-term plays. One thing I did run across is the one producer did not have any crop insurance, no hedging, and I don't know a situation, but I've heard this individual's going to be a negative $280 per acre. So there's some real pain out there in certain cases. So make sure you keep your pencil sharp. And lastly, too, Brian split our technical and he's kind of looking forward here. And if it's following the analog years for 25, 450 of corn and 1050 beans might be the upper end of the range there.
And finally, Brian Stark, your final thoughts from the Andersons.
Yeah, I'll tie into Curt's comments. I think as we get ready to prepare to harvest a large crop, I think it's important as you fill your on-farm space, whether economically it makes more sense to put corn or beans into that space, you need to think about profitability. And if we get to a profitable level with your yields, we need to sell the carry. The market is providing very attractive carries outside the curve. But as we know in carry markets, especially when we're not seeing an increase of demand, that we tend to lose those carries. So don't just tuck it away and forget about those bushels without a risk management plan in place.
Commodity Week is a production of Illinois Public Media. You may listen to the whole of the program anytime you'd like, online, on demand, anytime you'd like at willag.org. That's WILLAG.org. Our thanks go to our panelists this week, including Ellen Dearden of AgReview, Curt Kimmel of agmarket.net, and Brian Stark of the Andersons. I'm University of Illinois Extension's Todd Gleason.